70% of Uber's revenue now comes from its ride-hailing business, with the company reporting a staggering $4.8 billion in revenue in the last quarter alone, a 72% increase from the same period last year. But what's more interesting is that Uber has just entered its asset-maxing era, a term coined by TechCrunch Mobility to describe the company's aggressive expansion into new areas. With 35% of its budget allocated to research and development, up from 25% just 2 years ago. But can this strategy really pay off, and what does it mean for the future of transportation? With Uber's market value reaching an all-time high of $82 billion, a 25% increase from the start of the year, and the company's user base growing by 15% in the last quarter. With 121 million monthly active users, can Uber maintain its growth momentum, or will it succumb to the intense competition in the ride-hailing market, with companies like Lyft and Via fighting for market share? And with the rise of electric and autonomous vehicles changing the game for all players involved, what's the strategy behind Uber's asset-maxing era, and how will it impact the company's bottom line? With the company aiming to reduce its costs by 10% in the next year, through the optimization of its routes and the implementation of more efficient algorithms. But what about the environmental impact, with Uber's carbon footprint increasing by 15% in the last year, due to the growing demand for ride-hailing services? Can the company really achieve its goal of becoming carbon neutral by 2040? With 45% of its fleet already consisting of electric or hybrid vehicles, and the company investing $1 billion in the development of autonomous driving technology. But what about the regulatory hurdles, with many cities imposing strict regulations on ride-hailing companies, and the company facing lawsuits from drivers and passengers alike? Can Uber navigate these challenges and emerge victorious, or will its asset-maxing era end in disaster? With the company's burn rate reaching $1.5 billion in the last quarter and the company's cash reserves dwindling to $5 billion, down from $7.5 billion just a year ago. But what's the real cost of Uber's aggressive expansion, and how will it affect the company's ability to innovate and adapt to changing market conditions? With 60% of its employees working on research and development, and the company filing 500 patents in the last year alone. But can this level of innovation be sustained, and what's the real impact on the environment? With Uber services available in 700 cities worldwide, and the company generating $1.4 billion in revenue from its food delivery business, up 40% from the same period last year. But what about the social impact, with many drivers struggling to make a living wage, and the company facing criticism for its treatment of employees? Can Uber really become a responsible and sustainable business, or is its asset-maxing era just a recipe for disaster? With the company's CEO, Dara Khosrowshahi, stating that the company's goal is to become the Amazon of transportation. But what does this really mean, and how will it affect the company's relationships with its drivers and passengers? And with the company investing $500 million in the development of its Uber Eats platform, can it really become a major player in the food delivery market, or will it succumb to the intense competition from companies like Grubhub and DoorDash? And with the rise of autonomous vehicles, can Uber really achieve its goal of reducing its costs by 50% in the next 5 years? Or is this just a pipe dream? But what about the impact on employment? With many drivers facing the possibility of losing their jobs, and the company facing criticism for its lack of transparency and accountability, can Uber really navigate these challenges and emerge victorious, or will its asset-maxing era end in disaster? With the company's stock price reaching an all-time high of $45 per share, and the company's market value surpassing that of General Motors. But what's the real value of Uber's stock, and how will it affect the company's ability to attract and retain talent? With 75% of its employees stating that they are satisfied with their jobs. But what about the company's impact on the environment? With Uber's carbon footprint increasing by 20% in the last year, due to the growing demand for ride-hailing services, can the company really achieve its goal of becoming carbon neutral by 2040? Or is this just a marketing gimmick? And with the company investing $2 billion in the development of sustainable energy solutions, can it really make a difference, or is it just a drop in the ocean? But what about the social impact, with many drivers struggling to make a living wage, and the company facing criticism for its treatment of employees? Can Uber really become a responsible and sustainable business, or is its asset-maxing era just a recipe for disaster? So what's the single most surprising insight from Uber's asset-maxing era, and what does it mean for the future of transportation? Will Uber emerge victorious, or will it succumb to the intense competition and regulatory hurdles? Can you imagine a future where Uber is the dominant player in the transportation market, or will it be a distant memory? Subscribe to our channel to stay up to date on the latest developments in the world of AI and technology. And join the conversation. What do you think? Will Uber's asset-maxing era be a success or a failure? Let us know in the comments below.